Hi, and welcome to Trendy Options. Today is the 16th of January 2020. This is an updated version of my swing video that I had. I went back to my library and I was going to give you guys a little something, and I realized it's a little dated, so I wanted to give you something a little bit more new. Not that a whole lot has changed, but I want to run you through how I set up a swing chart and how potentially you would trade this, or how I trade it. I'm just going to pick a random stock. BAC is going to be that name for today. First of all, if you've already chosen to be a swing trader, at a minimal, I think you should be looking at a weekly candle, but it's always in good practice to look at a monthly and make sure that when you click on the monthly that you are looking at the max. And what this means is that you're looking since the inception of the market or the data that your broker is supplying you on the template here. Okay, so here you can see we have BAC. Now I've already went from pivot high into pivot low, and I just wanted to know where the 618 is. And as a quick review, the 618 is the Fibonacci golden level, right? So what it means is this downtrend that we currently have in BAC, it's still a downtrend until it can close over the 618. And then it is broken. I always think like, well, why is it the 618 and not the 50, right? Well, because the 50, you're basically just between. You got bulls and bears, and you're just sitting there and you're trying to fight it out and figure out, well, where do we go from here? Nobody really knows. So that 618 level really holds a lot of value when you're looking at a 0 to 100, especially when you're talking about stocks. Okay, so how do I get this prepared for everybody? The next thing that I want to look at once we're outside of the monthly is go ahead and go to the weekly chart. Of course, we use trendy edges here, but don't let that deter you if you do not have the edges. We're going to set this up as if we didn't have the edges. Okay, so the first thing that I do is I really try to make this as simple as possible. What you're going to notice is there's a stock, and whether it's up or down, I'm going to give you two levels. And those levels, you're going to have a neutral box. And basically, it's going to say neutral right inside of this, right? And then outside of that, you're going to have targets. You can have a target here and a target here. And if price were to break down to the downside, I'm going to give you a target here and a target here. And it could be 2, 3, 4 targets. All right, now let's go ahead and get over here and see what we would do if we were looking to trade BAC right now. Another thing that I pay attention to is the weekly ATR. Now this stock only moves so far about $1.20. That's pretty normal for it on a weekly basis. Okay. As you can see, we broke out from this nice channel here in BAC. This was a pretty long channel as well from 2018 all the way into 2020 where it decided to finally break out. These are just little things you can note to yourself. Now, specifically, I can see that we're holding what we call the YE. This is the yearly edge, and we have the monthly edge here. And if you're listening to this video, I know that you've already watched all the other videos explaining the edges and so forth. Currently, we're underneath the ME, but we're supported by the YE. What I want to do is always find my most recent trend. Now remember, I talk about this so much, we need to get used to being able to identify trends. Sideways, up, down, sideways, up, down, right? Find your trend. And depending on what you're looking for, like how long do you want to be in this trade? If you're picking a strike, or if you're in equity, so if you're picking strikes for options, you're not going to pick BAC current price at 34. You're not going to pick a $38 strike for next week if this thing's only moving about $1.20. Sure, a catalyst could push you there, but most likely that's not going to happen. So I want to find the most recent trend. And if you notice, I'm going to zoom in here. We had this down, base candle, trend starts, base, trend starts, sideways, and this little guy right here, trend starts. Okay. So one thing that I could do here is I could take my Fibonacci and I could take the most recent trend over a longer period of time, and I can do something like this, okay? And I can say, look, it's already topped a couple times, and I know that this is resistance until it's not. So I can go ahead and select that, and then I can go ahead and select the 23.6. Now, why am I choosing the 23.6? You should already know this answer, right? So the measurement of this current trend says it is still extremely bullish as long as we hold the 23.6. So I'm simply going to take this off here, and this is going to be my neutral zone. There's a couple things that are going on here, and I chose this one because it could get a little complex, but at the same time, it's a perfect example of how things can really synergistically work together for you. So we have this neutral zone, and we're going to go ahead and I'm just going to write in here, neutral. And you can make this fancy if you want. You can make this bigger so that you can actually see it. We're just going to come in here. I'm going to make it a little bit bigger. Maybe color it yellow because yellow to me signifies like, just chill out. Pump the brakes a little bit and just slow down. Let it evolve. Let it work. There we go. And boom, neutral. So this is a neutral zone for us. And now we want to figure out, well, what if it breaks down out of here? Where are the targets? Where would they be? Well, that's where I can use my trendy edges, or we can just use more Fibonacci numbers. Okay. Now we know this only moves $1.20 on average, $1.30. So if I use a Fibonacci from here to here, I feel like that room for it to move down would be pretty significant. Let's just see though. All right, so if it were to break the 23.6 and come to the 38.2, that is only about $1. So I think, and I do know that that target is viable. Now, if you don't have the trendy edges, this will work. If you do have the trendy edges, I would also take into consideration your monthly edge right there. These, my friends, would be the targets to the downside for this stock, BAC. Now, if price were to break our neutral and break above, let's see where we would go to. Now, what we're going to do is go back all the way over here. That's right, all the way over here. And this is where you're going to bring your targets video into existence. We're going to use things like base candles, wicks, and you can see I've already selected that wick. Let's go ahead and move over here. It's going to take a minute. I apologize. And there we have it. Now this one, I think you guys would all agree that's very close. We're going to go ahead and delete that one. So our next target above here, it's actually going to be $37. Now when price breaks $35.65 to get to $37.39, right? That's about a little bit over the ATR. So you always want to think like, well, what if something comes out? Right? It's never that easy. Sometimes it is, but we want to take the road that suggests that maybe some kind of catalyst is going to stop us from getting here right away. So we want to put into existence and think about candle structures, right? So if we think it's bullish since it's already got over the 618, give it a week. Everyone starts trading it out of that break. These are weekly candles that I'm drawing. And then we pull back and we see that it can hold an inside week higher up on the previous week. That's always bullish. And then on a higher high, we can make it into our target. So something like this, I want to look out and decide. I think of these kind of candle structures and so forth. And then I look at timing and I look at ATR and I say, yeah, I like this BAC if it could break over this. And I want to buy out 2 to 3 weeks here. Okay, 2 to 3 weeks. This is how I would look at it from here. Remember, what we're looking for here, if you're a swing trader, is then on a minimum, you want to come down into the daily to wait for closes. Now, this is really, really important. Let me give you an example. If I were to have taken BAC because it went over the ME, on this day, at some point, it actually came up to this. But if I would have taken it, it would have closed under and then it would have gapped down. So what did I do wrong here? Well, I didn't wait for the candle to close. Let me tell you, so many traders, they get focused on the smaller time frame when they're trying to swing trade. So they're over here, they're trading a 5-minute candle above whatever their level is, and they're like, hey, it's above that level. It's been 3 minutes into the morning. I'm taking my swing trade. The best rules, in my opinion, to have for a swing trade is choosing the candle you want to see close over your level and waiting for it to close there. It's kind of like going to the methodology that we teach on the SPY and the Qs and the diamonds, right? We don't want to take that trade until we get an actual close over our level. Now, if you decide to take that trade as it's moving above the level, please know that you are front running the process that I am using. What that means is you want to go in smaller just in case something like this happens. Okay? So, same thing could happen here. Let's just draw it out so I can show you. It breaks the neutral. You say, yep, I'm getting in, right? It's going. You're going, wow, this is really working. I really like this methodology. And then by the end of the day, it's down here, right? Uh-oh, what just happened? Okay, so we want to avoid that if we can. It's okay to have a process again to say, hey, look, I know I'm front running it as it goes over here. Typically, I buy $500 worth, but because I'm front running, I'm only going to buy $100 worth. Okay, so a dollar contract or something. All right, and then if it breaks down, you lose, 50, 60 bucks. You have some kind of stop on it, but you also give it some room. Now, say BAC is like your favorite stock in the world to trade and you like the setup and I presented it. As long as it's staying in the neutral, just leave it alone. The best thing to do over here is not speculate, but to just set an alert, okay? And you can come over here and create an alert and you can say something like, go long, but remember, wait for daily close. Send yourself a note and that way you're reminded, okay? And then down here, you could put a note as well, go short. Now, I will tell you something, is that you have to take into consideration overall market conditions in most cases. I can't tell you how many times I hear traders say things like, well, did you notice that XYZ was trading green today and the entire market was red? Usually that stock on the next day comes right back down with the rest of the crew, especially if we're starting to downtrend for several weeks in the market. So please take the broader market analysis into consideration before taking a long or the conditions of the overall market. Okay. So this is a blueprint set up very simple using that methodology. Now, let me tell you something. I don't always choose, okay, let's go back to the weekly. You're going to have to kind of fill this out, okay? All of you are going to kind of have to fill this out, but it doesn't have to be that difficult. And what I mean is, you might not want to measure from this pivot high into this trend. You may have a smaller risk tolerance, okay? Or maybe you don't want to wait so long. So let me show you something. Instead of using that entire trend, let's use the most recent trend. And as you can see, this arrow is kind of letting you know where that trend is. Now you can go from here. And now we can go ahead and it looks a little bit different. We're holding the 38.2, which is also the YE, and we know that the 23.6, check this out, they're so close to each other, guys. So you might as well make this top yellow line your neutral line. Okay? We take that off, and now your neutral is a little bit tighter. You understand to yourself that the YE, you know how special this is, so for you guys who have the indicators, and it happens to be the most recent trend, the 38.2, which also signifies that this is a bullish channel. Therefore, I want to take the trade to the upside when we break the 61.8, but also the most recent 23.6 Fibonacci level. Pretty cool, right? So this is your neutral level. Another thing to take into consideration. See, all these factors, you really have to think about them. What if we don't want the 618? What if we just want to bring it up here? Is it really going to make a big difference if we go from 35.05 to 35.30? Maybe. But you also know how important it is for price to get over the monthly edge. So for me, I take those things into consideration. I like the last trend. I like the fact that, look at this confluence, folks. ME, right, with the YE, amazing. So now we have a real good neutral zone here. Whoops. So fun fact, if you accidentally move something, you don't know where it was, Control Z puts everything right back. So watch, if I delete this, Control Z, boom, comes right back. Okay. All right, so this is a blueprint setup for BAC, and we're not biased. This gives us a nice neutral stance on a swing trade. Okay, again, let's cover this. Start with your monthly. Make sure that you're looking at max since the inception of the market. Go to your weeklies. Look at your range, your ATR. Also, we can look at the following trend banners if you have the scripts. Okay. And then we're going to set up and look at the most recent trend. The same thing is going to happen if we were in a downtrend, right? We're just going to set it up backwards. Okay. Now, what is something that is pulling back? Let's go into, I'm going to give this one last one, but this is how we set up for something that is trending down. Let me think here. This market is just crazy, full of good stuff. All right, let's see if we can kind of give you an idea here. I mean, this is not much of a downtrend. Oh, I just thought of one of our members' trades. You know who you are. AMC. This thing has been trending down for ages, right? So what we're going to do here is take a big look at it. Let's go to the monthly. All right, and these are some extension levels that I gave our member, and they worked. Looks like they almost worked to the tick, which is really cool. And we're going to do this from a monthly standpoint. I mean, if you want to, you can see here, we have ourselves trend, 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 down, sideways, down. So let's take this most recent one on a monthly. Now, something like this, I mean, this is moving like, not very much. Let's just put it that way. The ATR on this is, not very big here. So let's go right here. What we're going to do is now we're going to measure this trend here. And this is on a monthly. Notice I did not go to a weekly because this thing is in pure carnage mode. All right, now we turn the fibs around and now we have these levels. I know that here, okay, is neutral. I'm going to write in neutral. I won't make it as pretty this time just to save us some time. Okay, there's neutral. And what do we know? We know that when in a downtrend, okay, see how everything I've taught you, if you paid attention to the Fibonacci tutorial, that it all comes together in what I'm presenting to you for swing trades. Okay, what we know is in a downtrend, if price picks up, it usually will go ask or drop or rejected into these levels. Okay, so for me, this is neutral because it could also break out here. Okay, so for me, I don't really want to take a long-term investment in this unless we can get out of the neutral zone. Because what that's saying is above here, right, the 38.2, we're no longer in the bearish channel of this trend. Very important, okay? But as long as we stay under here, I know we're still in that trend. Now, how do we find targets to the downside? You could do Fibonacci extensions. So this is like the opposite of what market we're in right now, okay? So the market, a lot of things, we don't have supply, so we do Fibonacci extensions. So you can easily do a Fibonacci extension from this trend. So you're going to start from the top down to the bottom and double click. And this is how you get your targets. Okay. And that's what that looks like. And that's where I got this green line from once upon a time. But anyways, if we were to break down underneath these green targets, this is what we're going for again. Okay. So targets up here to the upside. Now, where are my targets to the upside? Or sorry, to the downside. Now I'm giving you targets to the upside. Let's go ahead and put this right in here to this 50 and then our 618. Okay, just like that. All right, and we don't want to get confused, so I like to make these solid. All right, just like this. You can take this off if you want, just so it's cleaner. That's your blueprint for AMC. I really hope that this demonstration showed you, and now you can kind of go, oh, wow, that's really cool. Because now, when I watched the Fibonacci video, I didn't really put that stuff together, but now that I see it, it's all starting to make sense. If you have any questions, please reach out to me. I'm always here for you. Thank you again for being part of the team. I truly appreciate you. We'll see you in the room.